Hello and welcome again to our Daily Horizon View. The date is the 4th of the 4th, 2019. Today's spotlight is on ASX BEAR, that's the BEAR-BetaShares Australia Equity BEAR Hedge Fund ETF. Top 5's ASX Exchange Traded Funds. Moving on. So a quick overview of the market and how it kind of closed out today. Down day, 0.76%, closed out at 63.20. The laggards were energy, real estate, healthcare, utilities. Gold was down, silver was flat. Bit of movement in iron ore. That's a interesting play at the moment. Platinum was up and crude oil was down, and the others were mixed. So our top 5 percentage rises for today. We had MNRS, ITW, BER, CETF, and BNKS. So most of those are familiar. So BEAR is our spotlight today, so we'll leave that to the end. Quick refreshers, MNRS was our BEAR-BetaShares Global Gold Miners ETF, and that's currency hedged, and it tracks the NASDAQ Global ex-Australia Gold Miners. ITW is our iShares MSCI Taiwan ETF. Most people would know by now that our CETF is a VanEck Vectors China AMC SCI 300 ETF, and BNKS is the BEAR-BetaShares Global Banks ETF. Top 5 percentage falls: FAIR, GEAR, MVA, SLF, and VAP. So FAIR and GEAR are one of those ones that keep popping up every now and again. So FAIR is the BEAR-BetaShares Australia sustainability leader. So if you're looking for like ethical type investments, that might be one to look at. GEAR is the BEAR-BetaShares Global Australia Equity Fund. So obviously that's geared. MVA is a VanEck Vectors Australia Property ETF. That one tracks the returns of the market Vectors Australia A-REITs index, so that holds 11 of the top Australian property funds. SLF, most people should know that, or it should be ringing some bells. That's the State Street Spider S&P ASX 200 listed property fund. And then follow up, we had another property fund, which was VAP, which is a Vanguard Australia Property Securities Index. Top 5 dollar rises, we had CETF, ITW, Robo, IZZ, and UBU. So we've gone over most of those already. We'll have a quick snapshot on Robo. It hasn't been in the top 5 for a little while. That's the ETFs, Robo Global Robotics and Automation ETF. So that one tracks the index, comprised of companies involved in rapidly developing global robotics and automation industry. Quickly, we'll have a quick look at IZZ, which is the iShares China Large Cap ETF. UBU is the UBS IQ MSCI USA Ethical ETF. So I mean, all pretty low rises and falls for that anyway, and volume is not really there either by the look of it, although the ETF's mostly a low volume anyway. Top 5 dollar falls: IHVV, VAP, A200, SPY, IJX. So volume was low. IHVV is the iShares S&P 500, and that's hedged to the Australian dollar. VAP, we've already had a quick chat about. A200, which is one of the interesting BEAR-BetaShares Australia 200 ETF. So this one's a little bit different to the other ETFs that track the the ASX 200. This one tracks the sole active Australia 200 index. So that's weighted according to the free float and the market capitalization. So that one's relatively small. There's about 400 million in that one. So SPY, I think we had a look at yesterday, and that's just the State Street SPY S&P 500 ETF, and IXJ is the iShares Global Healthcare ETF. So if you're looking for some exposure to healthcare, that's not a bad one to have a look at, do some investigation on. Top 5 number of trades. We had VAS, STW, VAP, IVV, and VGS. So no surprises there that we'll see those in the top 5 number of trades. Looking at the number of trades, it's all pretty low. 160 was the top there for VAS. So VAS is the Vanguard Australia Share Index ETF. So that tracks the S&P ASX 300, which is a little bit different to the others. So STW, as mentioned before or previously, is the State Street SPY S&P ASX 200. So people looking for exposure to top 200 or 300 companies in Australia. VAP, we've had a quick look at. IVV is the iShares S&P 500 ETF. So we talked about the hedged variant before. BGS is the Vanguard MSCI International Shares Index. So that one tracks the return of the MSCI World ex-Australia Index. So that one's, if you want global exposure, there's over 5,000 stocks in that ETF. Top 5 by volume: ITHI, IOZ, STW, VAS, AAA. Volume for ETHI, ETI, just a little bit over 500,000 traded. IOZ had just over 400,000. Yeah, move on from that one, I think. Top 5 for value. Let's see what we've got. STW, IOZ, VAS, IVV, and ETHI. So no major surprises there. So STW was, we've had $12.4 million worth traded through today. Just a quick run through on ETHI. I think we spoke about this one before, but that's the BEAR-BetaShares Global Sustainability Leaders ETF, and that tracks the NASDAQ Future Global Sustainability Leaders Index. So sort of an ethical investment type thing. So our spotlight today is the ASX BEAR, which is the BEAR-BetaShares Australia Equity Bear Hedge Fund. This one gives investors a simple and accessible way to obtain short exposure to the market, and it's designed to go up when the market goes down, so, or vice versa. So if the market's going up, it'll go down. So a 1% fall in the Australian market on any given day can generally be expected to deliver a 0.9% to a 0.1% increase in the value of the fund. And obviously, if the reverse is true, that will also be true. This is a hedged portfolio against falling markets via effective use of capital. Can be used to see profits when markets decline. So you see, looking to hedge your downside. And good little fact about the ETF is there's no need to borrow shares or use proprietary trading platforms in order to actually obtain short exposure, it's an alternative to CDFs, and it's also actively managed. So there's always someone at the desk looking and keeping an eye on what's happening with it. Another positive is there's no margin calls for investors, so you can't actually lose more than your initial investment, whereas some of these other CFDs and shorts and whatever else you can. So liquidity, it's available to trade like anything else on the ASX. Quickly flick through these. So the net asset value is 13.065 or thereabouts as of today. It's trading just above net asset value at 13.11. Management fees quite high because it's an active hedge fund effectively, so it's 1.38%. Annual distribution is normally in July, however the last dividend was paid in 2016, so don't expect anything at the moment because your dividend yield is 0. So the fund invests all of their assets in cash and cash equivalents, and sells equity index future contracts, so using ASX SPI 200 futures. So selling the futures can be expected to generate a positive return for the funds when the S&P ASX 200 index declines. And obviously, as we've discussed before, if the reverse is true, then the reverse is true for your share price. So overall, since the inception of the fund in mid-2012, BEAR's down 8.42%. Since beginning in September, the fund has risen close to 12%. So that's sort of pretty much has probably be obvious now. Should mirror the S&P ASX 200. Personally, I'm not overly experienced in using these types of instruments, therefore I'm a little wary of them. So, but having said that, if that's something, because the forecast is a little bit turbulent for the next 12 to 24 months, something like this might be handy as part of a balanced portfolio. But yeah, once again, I'm a bit wary of these type of things. For future reference and other stocks to have do some more research on, you can have a look at BBOZ or BBUS. So they're just the more aggressive cousins of the BEAR ETF here. So yeah, the asset value calculations down the bottom there. So this is just a quick overview of the fund's return since inception. As I mentioned before, it's down 8.42% against the S&P ASX 200 accumulated index, which is up 10.91%. And you can see the graph there. Obviously they diverge because it's a inverse correlating fund. Moving on, so definitely just information here, not recommending anything except doing more research and making sure that we fit in with your own financial goals. So we give everybody information to arm everybody so we can do the best in creating our own wealth. So if you like what we're up to, give us a thumbs up, and if you even like us more, give us a subscribe. That'd be great. Thanks. See you tomorrow.